Hello to all traders, and we are back with more market insight video news for you, and this video is once again brought to you by Orbex. So looking at gold today, after its dramatic drop from yesterday's test at the 1800 handle, we are now seeing this $20 drop at the 1780 approximately. We'll look on the chart specifically shortly, but it is seen as a bit of a digression after what was supposedly a break at 1800 and then another move higher. But we've had weak data from China, we've had weak data from America as well, so a lot of traders are flocking back to the greenback to see if they can put in their bids to try and shore up the dollar in that respect as well. We've got the Fed minutes coming tomorrow as well, which could give an indication on which way not only the dollar but gold is going to head, as it looks to give clues to its next rate hike as well. So these are the things we're looking at in today's market insights videos, but we're looking at the fact that it was progressing nicely over the last month. You know, we looked at the lowest on 1680 that it had not so long ago, and if you think about it, over $100 move in a month is very, very progressive, but it seems to have taken a little bit of a backswing now. But just look on the daily chart, we've seen this progression to the downside, and now we've had another leg higher. A lot of analysts were predicting this V-shaped recovery back to these recent highs here. So it's taken a little bit of a correction at the moment, but it might not be for too long. We could get this break at 1800 any time in the next few sessions, and this could mean another leg higher. And then if it does break, psychologically you'll have to think more positively that gold will start breaking back to these fresh highs that we've seen roughly about 6 to 8 weeks ago. So if we just zoom in for better clarification on the yellow metal, so at the moment, as I said, I've just pointed out the 1800 handle, and this was the low 1680 that we saw not so long ago. Just remove these drawings so it's a little bit easier to see now. So at the moment, from a technical standpoint, using the Ichimoku indicator, we are now waiting to see a break at the lower border of the Ichimoku cloud after this dive to the downside. But you know, we've started off pretty positively for today's session, so another leg higher is looking likely, but it just depends if we crack this 1800 handle. If we look on the 4-hour chart, more interestingly enough, excuse me, we are now in the midst of the engulfment of the Ichimoku cloud. So this is going to be a strong test in the near term, at least, to see if we can break that and start moving higher. If we do, then we could possibly see this 1800 handle being broken in the next few sessions. But as I said, Fed meeting tomorrow night, Fed minutes, sorry, tomorrow night, to see if we're going to have a direction on where the next Fed hike, Fed interest rate hike is going to happen. If it's going to happen, will there be a slowdown? Will there be more aggressive rate hikes? Well, the Bank of England have already stated it might increase another 50 basis points. So will the Fed go the same way as well? We're seeing a lot of movement on gold because of this. So in the near term, we have to think that we're going to start seeing another leg lower. On the RSI, I didn't mention on the daily chart because there wasn't many divergences. On the 4-hour chart though, you can see a slight divergence, but it's not really too much in that respect. We are seeing this slight bullish divergence, and we'll see if it comes into play shortly. Now, we can't look at gold without looking at oil. We are now seeing oil, put it on the daily chart, have this very vast dissension, and if we put this into a channel, we can see just how bad it is for oil balls especially. So we are now seeing a sell-off, let's say, in oil. A lot of things have been in the news, and fundamentally you can say oil has been really, really driven. We've had obviously the supply and demand fears for the end of the year. Will this give oil another leg to the upside? If Europe does get cut off from Russia completely from its move to stopping oil going into Europe for the rest of the year, America will have to step up and start supplying Europe with more barrels of oil. Will that have a hit on prices as well? Well, at the moment we're seeing another move to the downside. So if we look on the 4-hour chart, because it's more interestingly enough been tracking another leg lower at the moment. We're just seeing now, just pull it back so it's a little bit easier to see, just seeing now what the consequences are from this failure, roughly about the $94-95 region, and we've seen a progressive move to the downside now, but it is holding at the recent lows that we've seen in the last few trading sessions. So because of this, we are now expecting, or most likely seeing, another leg up, and we'll see if we can get cloud engulfment and break this previous high that we've seen not so long ago. So it is all to play for in oil. With gold though, just keep an eye on the fundamentals. As I said, Fed minutes tomorrow, so we'll see what comes out of that and which way gold can swing, and if there's any opportunities in that respect. So thank you for joining me in today's video, and we'll speak again tomorrow. Bye for now.